Okay, welcome guys. It is, what is today? Tuesday the 24th of June in preparation for Wednesday, June 25th. We are going to continue with the Market Wizards interview with top traders before we get into tonight's homework. This is the chapter on the stock investing, David Ryan. I'll go back and repeat one of last night's quotes. He said, you buy a stock, it pulls back into the range. At what point do you decide it's a false breakout? He said, if it re-enters the base, I have a rule to cut at least 50% of the position. And then Swagger says, if it re-enters its base at all, do you mean if it's just below the top end of the base, or do you require some minimum penetration of the base? He said, no, if it just re-enters the base. In some cases, it will break out and come back to the top of the base, but not re-enter. And that's fine. I will stay with the stock. But if the top of the base was 20 and it breaks back to 19 and three quarter, I want to sell at least half of the position because the stock did not keep on moving. Frequently, if a stock drops back into its base, it goes all the way back down to the lower end of that base. Um, and we've seen that many times. From a technical perspective, Jack Schwager says, is the price going back into the base a bearish indicator? Yes, says David Ryan. Stocks should be at a profit the first day you buy them. In fact, having a profit on the first day is one of the best indicators that you are going to make money on the trade. Later down, he says, can you elaborate on using volume as a trading tool? David says, when a stock has been moving up and starts consolidating, you want to see the volume dry up. You should see a downtrend in volume. Then, when the volume starts picking up again, it usually means that it's ready to blast off. Okay. Jack Schwager says, what else do you look for a signal of the bear market? He said he looks for divergences between the Dow and the daily AD line, or the advanced decline line. He said, were you looking for a top because of that? No, a lot of individual stocks were doing very well. The big cue that the market was really topping was after the Dow came off of its high at 2746. There was a very feeble, low volume rally, and then the market got hit for another 90-point loss. At that juncture, I decided it was time to move out of the market. Schwager says, because the rally was on low volume? He said, yes. And the fact that there were very few stocks that participated in the rally. The advanced decline line did not move as high as it did on the previous rally. Also, in late August, the discount rates was raised for the first time in 3 years. I think it really stabbed the market. So he's talking about these divergences, whether you're using an LBR, a MACD, or whatever. Those are good to kind of pay attention to for potential divergence areas. Schwager says, you haven't been in the business long. Do you have the confidence that you will be able to trade successfully almost every year for a long time? He said, yes, because I have established a very defined set of principles that will provide a foundation for successful trading for years to come. Also, I plan to never stop learning. Do you feel that you are getting better as a trader? He said, yes. If you try to learn from every single trade that you make, you are only going to get better and better as time goes on. And then a little bit further down, Dave Ryan says, I think if you love what you're doing, you are going to be a lot more successful. What advice would you give to the novice trader? Asked Swagger. David says, the single most important advice I can give anybody is learn from your mistakes. That is the only way to become a successful trader. And then in the forward here from Swagger, he's reiterating some of his thoughts on what David Ryan said. He goes, success is basically due to using a precise methodology and applying great discipline to follow it. When traders deviate from their own rules, they invariably tend to lose. Maintaining a trader diary is an essential element in Ryan's approach. Every time he buys a stock, Ryan annotates the chart with his reason for buying the stock. Whenever he liquidates or adds to an existing position, a new chart is included with updated comments. One of the important observations Ryan made, which many other traders may find helpful, is that his best trades are usually winners from the start. Thus, he has little reservation about getting out of a losing trade quickly. Okay, the next one is next chapter is Marty Schwartz, champion trader. Marty Schwartz already also has a couple books out there. Some good things in his books as well. But we'll jump into tonight's trading. Wanted to start with the daily chart here. Let's pull this down here so we can kind of see what's going on. We've kind of broke out above these highs, and we actually closed. If Dustin was doing this on a 5 minute, we've actually closed above this. This whole thing has been done on this, this bearish indication on the LBR fast line, and the slow lines kind of started diverging. However, we are still hovering up above here, so we have not broken down below, indicative of a turn yet. Additionally, we did a false breakdown of this 3 bar, false breakdown only to move back up and close back above that 3 bar. So that being the case, that leads me to kind of further bullishness potential here. Even though I may have some counter arguments, I want to keep that in mind. This could lead to further bullishness for now. The LBR, I pointed out the LBR, also the 2-period rate of change. So this is the 2-period rate of change from yesterday to today. We went from, the two rock was 1.66, and it moved up to 1.97. Not a huge move compared to, the day before, where we moved from negative 18 to 1.66. So that is indicating, to me, indicating a little bit of lack of follow through there potentially. So we're going to keep an eye on that 2 rock on the daily and see if we get strength start picking up here to confirm this move up or not. So again, the LBR concerns me. The 2-period rate of change concerns me. However, just looking at candle patterns, chart patterns, what the price action's telling us right now, it's still bullish. So, all right, I wanted to pull over the 15 minutes. Oh, that's 60. Well, we'll jump into the 60 here first, because I have that up first. Okay, so on the 60 minute, you see all these gaps below. We saw these gaps below here, gap below here. This one got filled. This one did this spike down, kind of filled this. That was the Juneteenth price action there, so it did kind of fill that price action. Moved on back up. Then we kind of did this almost like an exhaustion gap, between yesterday and today. So it's almost like an exhaustion gap. So I want to be cautious on that. Going into the last hour, this has done a Keltner channel reversal. Now, this is more so that we've just shot up, pretty darn fast, or pretty high, pretty fast, on almost a straight line up. This first Keltner channel reversal, if this one does not play out in the morning for a reversion back down to means, which currently sits at 6091, 6090, 6091 zone, then I'd be surprised. Then I would definitely want to play the second Keltner channel reversal if this one does not play out for any reason. I wanted to let me come back to the 15-minute on this, because I did want to show the 6090. So the 6090 zone here, which is where the moving average on the 60-minute currently sits. Wanted to show the 240, which is on this other page here. Yep. So the 240, so 6090, is right here. So this is around 6090 zone. So if we were to come back into the top of this previous potential range here, it's interesting that we read from David Ryan tonight about what he does if you move back into the top of this zone. He liquidates part of the position, because he said if you move back into it, you could go all the way back down to the bottom of it. Whichever line you pick as the bottom, because like I said, I got multiple support resistance zones, where it touched those areas multiple times, is why I have these horizontal lines in here. So it would be interesting if we move back down into that. Are we going to stop there or have further continuation? So just things to just keep in mind for tomorrow, guys. Review these things on your own charts, look at them yourself. Let's be aware of them. I'm going to have my notes out. Maybe we can review some of that stuff in the morning, even before market opens. Okay, wanted to go back to the 15-minute version over here on this. So, okay, so on the 15-minute, again, we had just this straight continuation as you saw on the 60-minute. We are getting at the close of the day, did that move down, come back to the 15-minute moving average. If we open below that 15-minute moving average, it could be a gap and crap. We may not go back up and fill this. So if we open below this 15-period moving average, we may or may not go back up and touch it. We may just take a crap on that. So that's, like I said, I want to temper my overall bearish sentiment with this, with looking at the fact that we did that false breakdown on that 3 bar on the daily, closed back above that 3 bar, and actually closed above that prior area. So I want to temper this, all those things together there. Okay, so we showed that zone, pull back in the top of that box range. We have already checked. Oh, I was showing this on the 240. We did already come back here and check this. I'm going to zoom in on this and kind of pull it down here for you guys to see here. This that 60, 90 zone, where it is. Yeah, right here. We did already check the 6109, 6110 zone. So we did already check that once. It'll be interesting to see if we come back down and check that again, kind of come down into this zone for that 60-minute .D chart moving average. Of course, that's going to continue to move up as the the market opens. So like I said, it's down here at 60.90. It may be at 61.09 by the time it comes to it. But like I said, we've already met that as potential support off of this potential resistance in the past. Are we going to slice through that and continue on down, or find one more bounce off that? So again, just some zones to be aware of there. I do also have the 65,000. Nope. Let's leave that up there. Let's pull this over here. Oh no, I'm sorry. It was on that chart. So this is the 65,000 tick chart here, where we have, I thought it was kind of interesting. We've been in this long sideways consolidation. That should support a move out of this on good volume coming out of it. But other than in the close of day, other than the close of day volume, which actually was a little bit back down, to close the day out there, as we saw. Other than the close of day volume, we didn't really move up on much more volume here. So I just thought that was kind of interesting that to see if we have this confirmation of this breakout to the upside or not. And then on the internals, let's back over. So this, you can see down here on the SPY, this is the SPY daily chart. We kind of had what, again, we've had these different gaps, gap here, kind of came back here, gap here, move up, and then another gap. It's almost like, are we reaching an exhaustion gap, or are we truly going to take out these SPY's prior highs? I mean, we're not too terribly far from the all-time highs, so that is not terribly out of the question, obviously. But are we going to meet this overhead resistance where we have in the past, which is kind of where we closed here in the SPY today? So are we meeting that overhead resistance here for a turn back down, fill this gap down here, or proceed to move on up on news of war and all this other stuff? But one other thing, I'm going to zoom in on the VIX here. So, the VIX here, we've seen that, this is kind of on the LBR 310, just keeps moving up, almost like we're coming back down here, almost like a little fake out where we could move back up. This was a pretty extreme gap here on that. Of course, that did result in a nice gap up in pricing, but keep an eye on the VIX tomorrow as well to see if we move back up. That 20-period moving average there, or if we have further continuation down, which would support additional move up. All right, guys, that's it. We will talk again tomorrow. We'll review some of these things tomorrow morning before we start our pod there. And good trading, happy trading, and yes, call out my plays. So if we could all do that, but especially me, call out my plays. Don't just trade in secret. Thanks, guys. We'll talk again soon.